Hello, ladies and gentlemen. I'm Casey O'Rourke here at Fross and Fross Wealth Management. Pleased to bring you our latest economic and market update for the week of May 20th, 2024. But before we dive in, please take a moment to look at the disclosures attached within the email, or if you're on social media, feel free to go to our website at www.frossandfross.com. Also, today's presentation should not be interpreted as a formal recommendation of any type. Today, I would like to acknowledge the recent record highs in the market. Just last week, the NASDAQ set a record high on Tuesday, and the S&P 500 and Dow followed suit the very next day. This was lifted by fresh data on inflation and a brighter outlook on eventual interest rate cuts. That's proved to be a pretty good tailwind in the equity markets, one that has been anticipated for quite some time now. On Friday, the Dow hitting a major milestone, closed above the 40,000 point level for the very first time to cap its fifth positive week in a row. The last time it hit a major milestone, the Dow, was when it surpassed 30,000 points. And that was about 3.5 years ago that occurred right around November of 2020. Remember back to the COVID days. I know we don't like to, but the reality is that surge coincided with positive vaccine news. Looking back even further, when it hit 20,000 points, that was in January of 2017, the index thrived and had sharp gains followed by the election as investors were optimistic and those plans for tax cuts, deregulation, and infrastructure spending, that would boost corporate profits. It's even more interesting to me that at the 10,000 point level, when it hit that milestone, that was almost 18 years prior to its previous milestone in March of 1999, right around that dot-com bubble. And looking back at history, it was almost 3 decades prior to that even, back in November of 1972, that it was at the 1,000 point. Hard to believe from that point on. So some pretty big gaps in the growth there along the way and the time frames, but not sure why, but the reality is we're at 40,000 and it's pretty exciting. When the widely followed Dow reaches a major number like 40,000, it certainly gets the attention of investors of all types, as well as the financial media and news. And although such milestones don't really do anything to alter the fundamentals or drivers of the market, they can have more of a psychological impact, and the influences investor attitudes and behaviors. And so I would encourage you to stay in your lane, remain true to your long-term goals and objectives. If anything has changed, such as your goals or objectives, your risk tolerance, your feelings towards risk, please reach out to your team member here, and we're happy to discuss that in more of an individual basis. So also to keep in mind, those indexes such as the Dow, the S&P 500, the NASDAQ, those are all stock equity indexes. Probably not an apples to apples comparison to your portfolio, but just something to keep in mind. I think the real question that I have here is, are investors starting to feel more euphoric about the market with the continued momentum? And should it make us feel nervous? I don't necessarily think so, but I also don't think it's unreasonable to think that we could potentially see a pullback of some magnitude or a correction in the near future. I guess time will tell, and we won't know until we're looking back at it. The latest inflation data lifted investors' expectations for interest rate cuts later this year, something that we've been anticipating for a while. And government bond yields fell sharply, with most of the week's decline coming in response to Wednesday's better than expected inflation report. The yield of the 10-year U.S. Treasury bond closed at 4.42 on Friday, which is down sharply from 4.69 at the end of April. The Dow's climb up to the 40,000 point level coincided with what could have been a challenging environment for the stock market gains. If you think back to where things were March of 2022 through July of 2023, the Federal Reserve really had a big job ahead of them, and they were aggressively raising interest rates at that point in a campaign to really combat inflation. And the Fed rate hikes translate to higher borrowing costs, making it more difficult for companies to finance their growth. However, concerns that the higher interest rate environment could sink the U.S. economy into a recession. That never materialized, which, thank goodness it didn't. The jobs market remained strong, and inflation, it gradually showed signs of cooling off, helping the Dow defy the odds to continue to march to higher highs. In summary, the investor expectations are calling for 2 Fed rate hikes in 2024, probably around the third or fourth quarter. Hard to believe that we're in the second quarter right now, halfway through it. But if that does happen, should prove to be a nice tailwind for the markets and continued with an upward trajectory. But I don't think it'll be anything short of any additional volatility as we get closer to the election. Well, that's all I have for you today. But before I forget, next time you're in our office, feel free to grab a piece that we have here. It's called the Peace of Mind Checklist. A lot of information, important data that you should have somewhere for yourself, for your loved ones, more importantly, your estate plan. Just pick one up next time you're here, or if you'd like us to email you a fillable PDF, happy to do so. If you have any questions, feel free to reach out to our team here. We're at 352-205-7800. Thanks for joining me today. Have a great week ahead.